The financial market is about to witness an unexpected turnaround. While all eyes are on giants like the dollar and euro, there are coins hiding in plain sight, ready to explode in value. But why are these currencies, such as the Iraqi Dinar and the Vietnamese Dong, attracting audacious investors? And more importantly, how can these risky bets turn small amounts into fortunes? What hasn't history told you about these growing economies? Get ready, because the answer will change the way you see the future of investments. Iraqi Dinar, IQD, a high-risk bet with high potential. Investing in the Iraqi Dinar may seem like a bold idea for those looking for big returns, but this bet is fraught with uncertainty. Iraq is a country whose economy is anchored to vast oil reserves, and many speculate that over time, this could result in a massive revaluation of the currency. The post-war reconstruction scenario, added to the possible increase in oil production, makes some investors believe that the HEI could eventually appreciate in a surprising way. However, for this to happen, the country needs to overcome decades of political and social instability, a factor that keeps many investors cautious. Those who bet on IQD are essentially putting their chips in a future of stability that may never arrive. Another factor that attracts speculators to the IQD is the tight control that the Iraqi government exerts over the currency. This control, on the one hand, keeps inflation at low levels, but on the other hand, prevents the currency from floating freely on the international market. This means that as long as the country does not let go of these restrictions, the currency is likely to remain undervalued. Investors who believe in the potential of the IQD see this control as an opportunity for an explosive appreciation if the government decides to liberalize the exchange rate policy. However, this change, if it occurs, has no scheduled date, which makes the HEI an extreme patience choice. Iraq's dependence on oil is another point of uncertainty. The global oil market is notoriously volatile, and the health of the Iraqi economy is strongly linked to these fluctuations. A rise in oil prices could bring an injection of capital into the country, potentially strengthening its currency. However, the global transition to renewable energy sources and geopolitical volatility may reduce oil demand in the long run, limiting the growth prospects of the IQD. Investors betting on the IQD should be aware that this is a move that depends on the uncertain future of fossil fuels. The political context in Iraq is also a decisive factor. The country faces significant challenges, such as internal conflicts and sectarian tensions, which affect economic stability. The Iraqi government's inability to ensure widespread security and prosperity means that confidence in the economy and currency remains low. In addition, the influence of foreign actors in Iraq's politics remains a threat to economic progress. Those considering investing in IQD need to be ready to navigate terrain fraught with geopolitical and economic pitfalls, where any instability can quickly undermine gains. Finally, the Iraqi dinar is a currency that, for many, represents a bet on an uncertain but potentially lucrative future. However, any significant appreciation of the DQI will depend on a confluence of complex factors: political stability, economic recovery, and changes in the global energy landscape. If these elements align, the IQD could provide substantial returns for investors willing to take the risk. But this is a long-term journey, and uncertainty is the only certainty in this type of investment. Vietnamese Dong, VND. The growth of an emerging economy. While the Iraqi dinar is a speculative bet, the Vietnamese Dong offers a more calculated and stable opportunity, backed by Vietnam's impressive growth in recent years. Vietnam is emerging as one of the world's leading manufacturing hubs, attracting foreign investment and positioning itself as a viable alternative to China in many industries. Technology and manufacturing companies are relocating their operations to Vietnam, taking advantage of its low-cost, skilled workforce. This robust growth, driven by exports and investments, makes the VND have a potential for steady appreciation, offering an attractive opportunity for investors looking for a currency pegged to a rising economy. The Vietnamese government has taken a careful approach to exchange rate policy, keeping the VND stable while promoting economic growth. Unlike many emerging economies, Vietnam has managed to control inflation and maintain a sustainable growth trajectory, which provides confidence to foreign investors. This prudent economic management, coupled with the structural reforms that have been implemented, positions the VND as a currency that, while still controlled, could appreciate in value as the country continues to prosper. Exchange control, in this case, is not seen as a barrier, but as a mechanism to protect against excessive volatility. Another bright spot for VND is Vietnam's rapidly expanding infrastructure. The government has invested heavily in infrastructure projects, such as highways, ports, and industrial zones, which are helping to boost trade and increase productive efficiency. These improvements not only strengthen the local economy, but also attract more foreign direct investment, which creates an even more solid foundation for the appreciation of VND in the future. Investors looking at VND are betting on a coin backed by a long-term economic plan, different from the speculations surrounding IQD. Moreover, Vietnam's political stability cannot be ignored. While Iraq continues to deal with a number of internal conflicts, Vietnam is known for its centralized and efficient governance, which ensures a conducive environment for business and investment. Social peace and governmental stability are crucial factors for investor confidence, and Vietnam offers just that. The Vietnamese government is committed to continuing economic reforms and maintaining a stable political environment, which puts the VND in an advantageous position relative to other emerging currencies. In summary, the Vietnamese Dong presents an investment opportunity that combines economic growth, political stability, and expanding infrastructure. For investors seeking an emerging currency with less volatility and a stronger economic base, VND is an attractive choice. Vietnam is on an upward growth trajectory, and with that, the appreciation of VND seems to be a matter of time, providing considerable returns for long-term investors. The future of investing has never been more uncertain or so full of hidden opportunities. With the Iraqi Dinar and Vietnamese Dong on the verge of a possible upheaval, a crucial question arises. What else is hiding in the shadows of the global financial market? What do other investors already know that is still under the radar? History may be about to repeat itself, and when the next big move happens, who will be prepared to make the most of it? This is just the beginning of a journey that goes far beyond what meets the eye.
With